Okay. Are we ready, guys? What have we been up to this week?
I don't know where the week's blooming gone. That's
Honestly,
for sure.
I don't know where 2 weeks gone. I feel like yesterday since we did this single flat.
You sent through a message. You went, Wes went, oh, did we get more good content from the other podcast? I was like, yeah, absolute loads. And then in my head, I was like, that was only like yesterday. But
It was
like,
2 days later, to be fair.
I was like, I haven't even had time to like put it together.
Yeah. That's the world right now, though, isn't it?
Yeah, that really is.
Everything. It's kind of do everything and do it fast.
Get it done.
It's
And if you
so
don't-
much.
But I do have to say this is
Content
the
is key on
fastest-
that side. It's crazy.
Yeah.
The fastest flowing year of my life so far.
Yeah.
And I don't know what I've done.
And I think that's the interesting thing. Like, everybody's talking globally about kind of recessions, not recessions.
Yeah.
But the world is manic.
I
at the
think
moment,
one
frantic.
thing, everything's happening so quick and travel so quick, and because I feel like more than ever, maybe it's because we talk about we have these conversations more, or maybe it's because we're slightly older and our friends travel a lot more. But the speed of what the engagements in your head, when you're younger, you're like, okay, you go and do an after school club on a Monday, and you go here
Like the
to watch
girls
the
do
cinema
now.
on a Sunday. Whereas now it's like, oh, well, this person's having a party in the other end of the world, and then suddenly, where do you want to book your holiday? Okay, we're going to this country, and I feel like the diary's just become more like the world's become smaller. And more so because of technology and consumers, but more so like the influence of like, okay, somebody did something really cool in, I don't know, LA, or something cool happened in China. I was going to say cool, I don't know. Something happened in China. And then it hits you, like the impact of that is so quick that even as you said the other week, it's like you're on TikTok in the evening because America's awake then. Like the timescales are different, aren't they?
Yeah, and it's like the moment you know about it, it's already yesterday.
Yeah.
Literally.
Yeah. Obviously, given working markets, especially in markets.
Yeah, everything is moving
right
so
now,
fast.
like what you put in your notes, which we'll talk about, but in terms of how it feels.
Everything's so high.
Yeah.
We shall say. But we'll get into that deeper into the podcast.
Yes, so we're back with episode number, technically, what was this, 5? Episode number 5, Money Talks.
No.
Well, it is. I turned that bonus clip into 4,
Is
didn't
it?
I didn't write down as bonus. I was like,
yeah, that means you're right.
Is this
actually.
episode 4?
That would be 4. Hang on.
we're technically 5, but we're
we
4.
we are episode 4 now.
Grey hoodie,
4,
jumper,
5.
black hoodie, yeah.
Let me just
We need to get some more merch.
let me just
that's what that
scribble out
means.
my episode 3 notes then. Let's just rearrange that to episode 4. I was thinking last night, I was thinking, what episode are we actually on?
I do my cheat sheets.
Welcome to Money Talks. All opinions expressed by Wes Wilkes, AJ and Curtis Pritchard, and any guests are solely their own opinions and do not reflect the opinions of IronMarket, Wealth, or FINT. This podcast is for entertainment purposes only and should not be relied upon for any investment decisions. This is not financial advice.
Yeah, so we've got quite a lot to talk about. Some things that are still relevant from previous weeks. So I have to talk about Nvidia Growth, like considering what it was as a percentage of the S&P 500 previously to now being over 5% of the S&P 500. When somebody says 5% of something, sometimes you think that's not a lot, but 5% of the S&P 500 is monstrous.
Well, if you just calculate really, really quickly, it's 500 companies. So 5% of that entire thing is massive.
Their growth has been
Massive. So like if you
exponential,
had the equal weight version of the S&P 500, which I'll come on to in a bit actually, but the equal weight version, so if every stock in there was just weighted equally, no stock is over 1%. So that's 0. I think it's 0.6, something along those lines.
But do you see it's different within the market now? Let's say you take multiple companies within the S&P 500. You say 500 companies, but as we spoke about in the previous past, like let's take Apple. Apple's like 10 companies in one. It's not one company. It's like the way that it's viewed is changed and adapted. Like the conglomerate, that it could be the whole S&P 500. Like if you blink, like split that up into 10 companies that would still be in the top 500.
Yeah, so a lot of people are using that as a reason as to why this is different than the .com. If we were to call this a bubble, which is probably dangerous, but if we were to, then they'd be using that as a comparison to the .com bubble, saying that look, that's fine, but look at Apple. And I've said to you guys before, I think I remember, but the AirPods, if it was its own business company, okay, Apple are getting hammered this year, but if it was its own company, it would still be in the top 10 in the world. And that's the thing about Nvidia. It's kind of that's the other thing about Nvidia's ridiculous climb at the moment. It's kind of pushing those huge firms out of the way with each climb.
Yeah.
So it's gone past, it's gone past Meta, it's gone past Amazon or whatever.
Well, it's first, yeah.
Ticking those off. I think there's only market capitalization wise, there's one above it.
Yeah,
two above it, maybe?
I think, in 2023 it was 239% up Nvidia Corp, and then 2024 year to date 79%.
Yeah,
that's mental. It was first in the S&P ranking last year, S&P 500 ranking this year as well, first again. Yeah. Meta was second last year.
But what reference are you referencing that to, Curtis? Are you on about growth or are you on about capital size?
Yes, well, just the growth of the company, isn't it?
Yeah, that'll be market capitalization.
Of the Magnificent Seven here, because I was... The reason I've got this little chart here, which I'll run through this chart now, actually.
Oh, you're on about the return, though, are you? Like the amount percentage it's actually made within the
share
time
price
zone.
increase.
Is that what you're on about?
Yes, yes, that's what this is, yeah. Because what I was doing some research on was, which I'll ask you now, was actually because we talked about it. Why are the markets so wild in this day and age? The reason I'm saying this is, for example, S&P 500 is up, but a lot of the stocks in the S&P 500 are quite down. Yeah. And then you've got the big ones like Nvidia and things like this and Meta, which have outperformed everything, which has kept the S&P 500 still on an upwards climb. Yeah. But are the markets always been this volatile?
Okay.
Have they actually been so up, so down? For example, Tesla was 102% in 2023. Yeah. It was ranked 10th on the S&P 500. Year to date, it's minus 29%. Now it's ranked 501 on the S&P 500. That here, yeah. So it's actually not even...
That's the most startling one out of that chart that you've got there. So S&P ranking in 2023 was 10. S&P ranking this year, which of course is ironic because it's the S&P 500.
And it's 501 first. Really, it's not made it, but they can't kick it.
I don't know where this has come from, so I'd have to double check why. Bloomberg. Oh, that's interesting.
Yeah.
But yeah, that's not great. But it's obviously had a horrific year. In terms of volatility, so kind of, and I know you guys wanted to ask me about VIX, didn't you?
Yeah, my reference was, I think we should talk about the VIX because in my opinion, it's always referred to, even if I'm investing in something else, at the part of a conversation, that will always arrive.
Yeah, and if you're listening to investing podcasts and you're looking at investing stuff on TV,
longevity,
or if you're on X and you're reading stuff, there will be a reference. So VIX, put simply, stands for Volatility Index. Yeah. Mm-hmm. So VIX. And what it is, in a nutshell, I won't bore you to death with it, but is a measurement of expected volatility in the market, US equities, over the next 30 days, and they measure it by activity within options contracts. So how many people are buying options to sell a certain stock or to buy a certain stock over the next 30 days. Yeah, that's what VIX is. And it's been in place probably since the 90s, I think, from memory. But it is kind of an accepted, and people will use it in times of
it's
like
the
now.
fear index, isn't it?
Yeah, it's known as. Yeah. Times like now, and also times like 2022, March 2020. But what's really interesting about the VIX, and it is a very, very, it's an accepted measure of volatility and risk in the markets. And as you were saying, why is it so up and down? Why is it so volatile?
And is that something we should be worried about?
Well, it's funny you should say it, because actually right now it isn't.
Yeah.
So if there's a guy, so Nick Tamaros, who's an amazing analyst from the US. We take his analysis in. He's my daily routine. His analysis comes in every morning. And using the long-term average of the VIX is 20. So just take that as a normal number. Yeah. Standard deviation of the VIX, I'm not going to get too boring here, is about 8. Yeah. So if it moves down
above and below
8,
the
exactly,
number,
yes. So that's one standard deviation. And you would normally say that 2 standard deviations or anything over that is a big move, and it's either overbought or oversold. Yeah. And you would say that's the opportunity
and
on
that
the side.
Would usually be leading up to, okay, we're waiting for a this year earnings call and stuff that could adapt and could change that a lot.
Yeah, definitely.
It's quite usually
and actually at the moment, it's really not volatile.
Yeah.
But this is the interesting thing. It really feels it. Like, because intraday, like you were talking about Nvidia, that had a 10% move down intraday the other day.
Yeah.
We know how much it's gone up, so it can happen. But just to put some numbers on the VIX thing for you, give you some reality. So 20 is the long-term average.
Yep.
And today, in fact, I can have a quick look because it's measured constantly. About 14, 15 probably, which has been, so 15.56.
Yeah.
So it's currently below the long-term average.
Well, you come back to the reference of Nvidia dropping. Like the annoying thing is like there's no reason why it's gone up and no reason why it's gone down within that sort of time zone.
There's no news.
No news has come
There's no
out.
news as such.
Other
but
than people
the reason it's gone up and
hedging
down is because
their-
people are trading it. Yeah. The fact that you can get a 3 times leveraged Nvidia ETF.
So why do you
tells
think it's come down right now though? Just a lot of people have thought, oh, it's at a maximum high now. Let's.
It's gone very high very quick. Yeah.
I've got a thought
and
process.
it's a trading thing.
Yeah.
But just on the VIX, for example, I'll give you some kind of numbers. So 2001, which was the dot-com bubble.
Yes,
VIX reached on the 20th of September about 44. So if I've mentioned long-term average is 20, standard deviation is 8.
You've
That
over
is
doubled it.
well, way over. Dot-com bubble burst, right?
Yeah.
So 21st of October 2021, which was, if you think going back, that was post-COVID, NFTs existed and were doing what they were doing, all that kind of stuff, euphoria.
NFTs.
The VIX was at 15.
Yeah.
So what did I say it was today?
Same, pretty much.
So keep an eye on that. And then on the 16th of March 2020, which we all remember, was kind of around the time we were all told to stay at home, COVID, the VIX reached 83.
Wow.
What the? Is that like a record high?
That is a record high.
I was going to say, is that?
From what I've looked through, certainly from the 90s,
Okay, that's
the highest reading I could see.
Holy cow, yeah.
And then in March 2022, that was when we started to have inflation's out of control, need to raise interest rates, and the regional banking crisis
thrown in
the US. It got to 36. Okay. So that felt really bad.
That
was
felt
nowhere
like
near
the
that,
.com almost.
and nowhere near .com. Yeah, but certainly nowhere near COVID.
Yeah. That's interesting, actually.
So VIX that's why VIX is an important measure. So like now, things feel frothy, like you said. They feel things are very, very high, a bit
Very
punchy.
high.
You know, only a few stocks carrying it. VIX is around 15. So volatility is still fairly low.
But I think stabilization of kind of like all that free money has been put into the market. I think one thing that I'd kind of look is just if you step back and think like, okay, the stock market's continuously growing.
Yeah.
All-time high, you have to mention gold and Bitcoin.
Yeah.
People must have been holding back like masses amounts of cash, whether that be companies and personal. And that must be being put into the market right now. And that's one thing that I kind of find interesting because everything's high.
It's interesting to say it. What
money's coming from somewhere?
Yeah, but what the data would say, we have I have a weekly flows report from iShares from BlackRock.
Yeah.
And again, it's iShares, the biggest asset manager in the world.
Yeah.
Biggest ETF provider in the world, them and Vanguard. So, the data's good.
Well, that was my argument with Nvidia, sort of thing.
Yeah.
If I've made all that money within a chip at the end of the day, or the patent, that's what they hold, why wouldn't I just take that profit and put it into an ETF that controls all of the chip makers? Because there is that option right now. And I'm going to remove the profit, put it into something else because there's going to be growth within surely the whole market moving forward.
I think that's the difference between trading and investing. So what you're suggesting is what we would do. If we were,
we don't want the volatility.
If we're really bullish on semiconductors as a sector, then I think. And again, we're not bottom up, so we don't look at companies individually. We're top down. But if the top down data and research was saying be bullish on semiconductors,
we're only going to need more.
I'd look at semiconductor ETF. Absolutely. That's kind of where we would go with it. But I mean, in terms of the VIX, I might have said something wrong. If the VIX gets really, really high, like that, it's time to buy, and really, really low, time to sell. Sorry, I got the other way around.
That's fine.
VIX are low, time to sell. VIX are high, time to buy.
Low is low volatility. High is high volatility.
Kurt's trying to make a rhyme in there to remind himself.
Not that we try and time
high, buy, low, sell.
Actually, and you just talked a little bit on bull and and bear just. I want to clarify for people that don't understand that, what is bull, what does bear mean, Wes?
Right, okay.
But do you want the visual effect of it?
I'm going to do it anyway.
Yeah. Got no choice.
I'm not going to stand up though. No, so bull market is when things are rising.
Yep.
And a bear market is when things are falling, generally.
Yep. Do you have a good way of remembering
Well,
this?
the reason for it's why it was created is that apparently a bull fights by putting its head up.
Yeah.
Well, yeah.
And a bear fights by
Swiping it
Paw
down.
coming down.
It's literally where it's apparently where it's created. So when we use the term bullish or bearish, bullish is we're positive on something, bearish is we're negative on something. Yeah. And commentators use it all the time. The US obviously.
Yeah. Because I hear it a lot on podcasts in the US.
And in fairness, in the conversations I have with analysts, with economists, and with fund managers, it's still a term we use because it's a really obvious way to, we're bullish on infrastructure. And there'll be reasons underneath that as to why we might be bullish on it, X, Y, Z. So they're good terms to use in the
bullish up, horns up, bear down because the paw goes down.
There you go. See,
sweet.
Yeah. Shattered some illusions and
So coming back to what we were saying about that, the kind of everything is very high now. Everything is going very, very well. Like that money's coming from somewhere. That cash.
But
where do you think?
Sorry, I was talking about
from? So you were saying that what were you saying? You
we
take your
flows.
reference.
So we get flow reports from iShares, which looks at flows in the last week, but also over a longer period of time, so quarters and months. But money isn't leaving money markets really, which is interesting. So it looks more like that the money that's going into the more speculative assets, so Bitcoin, cryptocurrency, which obviously are hitting highs. Looks like it's probably coming from cash, from new cash, paycheck cash, that kind of.
I think that's a younger generation. Like, what's Bitcoin right now?
Or the other theory
Bitcoin
I might
now,
have,
54.
which I've not looked into, I can't get the data on necessarily.
That's pounds, not dollars.
Is it moving out of other cryptos? That's an interesting thought. Whether that might be.
That is
true,
I
think a lot of cryptos.
Bitcoin right here, right now, 55,000.
55.
Yeah,
this
pounds,
is an all-time high right now.
This is pounds, all-time high. But and then I look at my other wallet that's maybe got one or two smaller random things. Like 50 quid here and there. Not good at all. Never going to touch them.
All of the other cryptos are rubbish. You've got your Bitcoin,
so maybe
your Ethereum, and they're the only ones. I think everyone's pulling out.
Yeah, this was my
I've
thought.
pulled all of my money out of all of my other ones, and now I've just put it into the
And
Bitcoin.
if you look at flows, there are flows from some areas of the bond market.
Yeah.
There are flows into the bond market, but there's some flows out of shorter end bond markets that I see on the ETF flows, but now not out of money markets. So the only two conclusions I could draw is coming from new money, new cash coming in, new pay receipts, or other cryptos.
Yeah.
But I've not looked inside. I don't to grab the data.
Maybe an opinion. This is more opinion personally, but do you find obviously within the wealth market, the way that normal wealth would have been done is kind of through yourself and funds, and a lot of younger generation, or maybe they've got their first paycheck or they're a bit younger, and they're being a bit more kind of rather than say go to a casino and gamble, they're more open to being let's try different things, because they are still living with their parents. They don't have the mortgage. They don't have they're in a stable environment.
The key thing to that,
in
understanding investors' behavior or that kind of behavior, is it's mobile first. That's the key denominator in that. Everything I mean, we're the same.
It's in your semiconductor hand.
I'm 45. You're a lot younger than me, but if you're kind of 18,
did you mutter under your breath there?
if you're 18, 19, 20, then you're 100% mobile first. Everything. So your communication, your communities, your friendships, your relationships, everything's mobile first.
Do you just think it's more Bitcoin?
But not,
in
not
people's
even
heads
that.
as a get-rich-quick scheme. But now, take that. Be careful, guys.
But not
listen to that because it's scary. It isn't.
But not even that. The way that marketing and the way that the people can get you, you phones in hand, whatever you say, whatever your interests are, it's got you.
Yeah, it's like we covered last time, the influence of social media and TikTok, and which is interesting because it's been banned or trying to ban it.
Yes.
But the influence of that, because it's so immediate and quick. And almost there's a layer of diligence that's disappeared. Mm-hmm. In terms of if you were seeking some,
it's very easy
management
to
of your
set
wealth.
something up within 2 seconds
Exactly.
and have it out there without having any.
Well, if you didn't have
anything.
that, you'd have to look people up, right?
Yeah.
And you would still do that in a certain way where you take recommendations.
Yeah.
And there's a whole raft of diligence that you've done there that takes some of that risk away. Whereas that's disappearing with a mobile first. And I think that's part of the look, we're trying to solve it. That's part of the issue with kind of that mobile first and the social kind of side of it. Yeah. But talking about volatility as well, just one little point on that. I got this from the US.
So what was your kind of...
Oh, sorry, go on.
Coming back to what you said, where the kind of flow is.
Yes.
The information you got, what's it saying? It's literally just saying new money from cash.
New money's going into stocks.
Yeah.
And new money, flows. There's lots of flows into stocks.
Yeah.
There's lots of specific flows. So there's flows into tech still, and flows into other areas like there has been flows in some defensive areas like bonds and utilities that we've seen. But the money that's been put in the money markets, which I don't know if you remember, but like 2022, 23, that was all-time highs.
Yeah.
These money markets were massive. The money market funds were huge, and it's not really left.
And what's a money market
reality,
fund? What is that?
So that would be, it's effectively classed as cash.
Yeah.
But you would have a manager, say, for example, or it could be an ETF, but a manager who would be trading short-term or overnight cash.
So it's not sat there in a bank account because when you say it sounds like there's just money sat in the bank account, it's cash. It's in the market, it's still being traded. Yeah. But at the end of the day, it's quick, it's moving. You can put it into something else.
This is a little nuanced kind of jargony thing between kind of the industry and reality. Is we would, like, if I was putting a portfolio together, a money market allocation would fit under cash. It wouldn't fit under bonds. It wouldn't fit under equity, certainly. But in reality, it's not cash. It's overnight rates, short-term stuff. It might be 7-week, 30-day, something along those lines. Yeah. And there are different versions of them as well.
Okay.
But
that's when you say new money, is it just there's more people investing now, and that's what new money is coming into it?
There's been more money around. The COVID thing, the injection of capital, which obviously stoked inflation. That's the whole point in terms of what's happened in the markets in the last couple of years. But that money's had to go somewhere. Money always has to go somewhere.
And I think we always kind of forget also when we talk about stuff, the percentage of people like just nothing to do with even the market, just people growing older, their life expectancy is getting longer, and the amount of people that turn in 18 that can trade within, obviously the American market is much more talked about than the European market. There's more people. It's gonna increase.
That's right.
It's like statistically impossible that it's not gonna increase sheer volume of people.
Yeah, bigger populations. Growing populations. So growing populations in the emerging economies like China and Latin America, India, having access to tech, building tech, being able to invest in markets. So all of that has come at the same time.
And again, mobile first, because that's what they have.
Exactly. That's right. Yeah. So it's all come at the same time. So there is more of that. Yeah,
it's exciting.
No doubt. Yeah, it is massively exciting. Yeah, massively exciting. And opportunity for wealth creation in the next 25, 30 years.
So it's something phenomenal. We were talking about. It's like that opportunity within them. For the big companies that are already there, they must be like, oh my God, how do we hit that market? How do we get there? But also for new opportunities, it's kind of like even ourselves with setting up and thinking like where 5-year plan, 10-year plan, how can you best utilize it to make it accessible for everybody worldwide? Because I feel like the past of having a border is an old terminology. It's like as a younger person, it's like, well, why do we even have borders? Like, that's the sort of mentality.
It's interesting because politically, I guess over the last 20 years, 25 years, it has been globalization has been a thing which is making the world smaller. And then it's almost definitely before COVID, but certainly as a result of COVID. Before COVID, because if you think about very westernized, I know, but if you think about Brexit, then you think about Trump in the US, they were quite nationalist type movements. For a better expression, I get too political, but that was kind of a deglobalization. But I think that's happening now with things like friendshoring and onshoring. So manufacturing, say the US bringing stuff back either closer to them or with instead of manufacturing China, manufacturing Taiwan because they're friendly, that kind of stuff. That's almost a deglobalization. Whilst we've all got these things, and more people in the world are getting these things.
Phones.
And once you've got them, Yeah, phones. Yeah, of course you could listen to this, couldn't you?
Yeah.
Phones, you can get on them. Apps. It's a real kind of a real
position.
Yeah, it is a real contradiction.
You're like, okay, let's make sure we can do everything within our own country so we can survive if it all goes a bit tits up.
Let's make sure we can see everything in their country.
But at the same time, how can we know everything that's happening everywhere?
Absolutely.
It's a real information control, and I kind of, the one thing that I always kind of think, and I would like to actually learn a bit more about, because I feel like I don't, because in this probably from the education of school systems a bit more, but politically I don't really know that much about each party and all that, because I always find personally they say something and then they completely do something else when they get into office anyway.
Well, look,
what's the point in me learning about politics?
Absolutely, we were watching.
I've got to do it.
Room over there. Last Wednesday, we were watching the budget.
We have to talk about the budget, because that was the saddest bit of information I've ever heard, because there was no information.
It was boring. But the reason it wasn't
boring good.
The reason it wasn't boring is because we were sitting in there getting ready, because we were doing a budget presentation that evening. So we were watching it, making some notes. But it was all you got. It was honestly, I've been into my younger girl. I've been into Grace's school as well, but I've been to the girls' school and spent a day there.
Primary school.
Yep. So from the age of 4 to the age of 10, 11, way better behaved, even at playtime, than that bunch in there that we watched on Wednesday.
Let's talk about the budget before we talk about the people themselves that supposedly set institutions and laws, etc. But what from the budget, top 3 takeaways that is, I don't know, positive, negative, it doesn't matter, because from all I saw it doesn't really change.
There was nothing huge deal. There was national insurance coming down is positive broadly.
Did you see that they want to remove national insurance
completely
altogether?
Yeah.
What would that actually do?
National insurance is income tax.
Yeah.
I don't know why it's called something different. It's income tax.
On top of our tax.
Yeah, so really it'll create one tax, won't they, I guess, at some point. And that's a
so does that mean
point.
the other tax will then just go up?
Suspect so. You paid it now. So yeah.
They're taking that, they're just going to add it onto that.
Yeah. I mean, that's the thing, I guess trying to win votes at the moment from a political perspective, but equally you can't start slashing taxes when we're trying to get inflation under control.
Exactly, that doesn't work.
It'll just be inflationary. Yeah. They can't do that. And outside of that, I think a couple of changes around child benefit made more sense. So they're going to equalise that, which will make sense in 2026, and they've got a short-term measure for it, which was good. And then the British ISA, bit of a damp squib, to be honest. I can cover that a little bit later if you want. But people can put $5,000 more a year into an ISA, which is great.
Yeah.
But being kind of pushed into a specific area with it, i.e. UK companies, comes with its challenges and can be quite
child's
negative.
play, really. It really is, then, like what you were just saying.
It is. Yeah, it is.
On the ISA there, great opportunity, put more money in there. But in respect of what it could show for positive returns, that's quite hard to say. Let's just go UK.
Yeah, it is challenging, because I mean, we did that presentation in the budget. Even I did some charts just showing over. I think I did 1 year, 2 year, 3 year, 5 year, 10 year UK. So FTSE 100 and 250 against the Nasdaq, the S&P, and MSCI World. And I think one of those years, which is 2022, the FTSE outperformed.
Yeah.
Okay, so would it be quite painful for me to actually say this out loud, but saying it's not worth putting that extra 5k into that, you should go and find something else to put that into?
You can't. So what the idea is?
But you just don't put it into that IC. You just go somewhere else.
But $5,000 on top of 20 is a healthy kind of.
I'm not saying it's not, but I'm saying
tax-free.
I understand the tax-free element, but still pay tax, go somewhere else, and still make a profit.
So what I think they've done is created a problem for financial advisors and wealth managers, in so much as what we're going to have to do is, if somebody's got $100,000 in an ISA already, they can do an extra 5k. But
and I'm going to say no, Wes.
Well, what I might say is, well, there's your 5% UK allocation. The rest of it we won't invest in the UK, and then we're going to have to readjust and reallocate portfolios to manage it.
So you've already allocated it within the UK, and now you're removing it from the UK because you've been forced to do it in the ISA, and therefore, you get your little tax benefit.
So how is
that worse for the UK then?
I don't see it. I think there are other things that already exist that are arguably better if you want to fund UK businesses, which is the point, which is what they're trying to get to.
And is this the problem because it's coming from top down from government that maybe don't, I'm not going to say don't understand it, but aren't within that
exact
exact
don't appreciate
managers.
it because the problem with
because they're not the ones setting up companies, a lot of them. They're not the ones working hard.
And the
for
UK stock market's been shrinking, really. Well, I'll say a lot. It's been shrinking a lot over the last few years. And if you look at technology, right? Technology is driving the world forward. We're talking about the Mag 7. We spoke about.
You can't deny it.
Cannot deny it.
Yeah.
UK's best technology firm is Arm Holdings. Mm-hmm. It's listed on the Nasdaq. It's not listed on the FTSE. If it was listed on the FTSE would have had a great couple of years.
So would you say, okay, rewinding, like let's say FINT, it's a finance. We're a startup. We're a fintech.
Yeah. Yeah, correct.
We're UK, we're proud to be British,
correct.
And give us more support. We want to do more R&D, we want to invest in people, we want to invest in technology, we want to build it from the UK. Yeah. If we were like, okay, let's go an IPO, what would you do? You'd be like, okay, you'd look at both sides of the pond.
Yeah, you'd have to, because
you're not being invested.
Yeah,
you're not being like UK. It's not there.
So I've got a chart I'll show you actually on this, but if you
this is just personal. It's like what?
Yeah,
like it's annoying because it's like you've got so many great things that come from the UK,
well, what we do
and then they don't
UK,
stay in the UK because they're not incentivized to stay.
We have
here.
better tax incentives in things like VCTs, EISs, and SEISs already.
So invest into small companies, even like Crowdcube and this. You see the EIS and SCIS.
You know the risk is higher.
Yeah.
You accept the risk is higher for the tax benefits. So 5K
but the UK
ISA allowance
backs it.
in UK companies. I just don't see how that will seismically improve investment and push our UK stock market forward. It does not. It's not enough.
It's just too small.
It's not enough. There is one element where they are going to be more prescriptive to pension schemes in terms of the amount they put into UK companies. Now that might have an impact.
Because the holding of them pension companies is vast.
Yeah. Whereas historically the reporting has been slightly different. They're going to be more intrusive in reporting, and actually they want reports in to say, right, how much of this is in the UK or not in the UK. So maybe that might have an impact.
Yeah.
It's gonna have
I don't think that's a positive thing for the companies themselves, is it though? Like imagine if you're the person, I'm the person using that pension fund, I'd be like, well, I just want the best return at the end of the day, to be honest.
Yeah, so from my perspective, how I manage money. We're macro, top-down, tactical asset allocators. I hate the idea of that. We've been underweight the UK. The reason we've been underweight the UK is because the analysis and the research and the data is telling us to be underweight the UK. I don't want to be forced to.
At a certain point, you've got to say to the government, like they're asking these questions, they're going above and beyond in what I feel legally they should be doing, and personally they shouldn't be doing it. Like, go away. Like, Like, at what point do you go? Because if you don't go away, business goes away and we leave the country.
Invest in UK companies if you want UK companies to get better. Yeah. Don't force it onto everyone else.
This is a political side that I do like talking about, because it doesn't matter which party you're with. It's the same problem.
Absolutely, and it relates to investing anyway. It's policy. It's policy hangover and policy creation.
Okay, you're in Parliament right now. You've got the option. You've got the piece of paper in front of you.
Whoa, this has moved on.
Okay. Where's for Prime Minister? Here we go.
What would you do then that would incentivize businesses with the UK and grow the UK economy more? How would you best benefit through a bill or a opportunity?
I think I'm going to soapbox now. I think the first step is get real, accept where we are. Yeah. Brexit has happened.
Our market is our market.
We are siloed, right? So I think the quicker we accept that we are siloed, the quicker we can think, right, we're not this empire anymore. We are an amazing place to be, an amazing place to live. Make it exciting and interesting, which, it is fintech. We are an amazing place for fintech. Make it an exciting place for people to come and invest in. And that starts at the bottom from investment. I mean, if I was to ask you, if you think about the different cap sizes of companies. So you've got the FTSE 100 large cap, right?
Yes.
FTSE 250 mid cap. And then you've got small cap. So small, mid, large. How out of 100%, what percentage would you say the UK is small cap? Smaller companies that are listed, but smaller companies.
that are listed publicly that you can trade.
Publicly listed. What percentage of the total UK market are small caps?
I'd say most. Okay. Would you be saying because most are smaller, but if actually pro rata to the UK?
Curtis being led now because I think he was going to go.
I was going to say between 24 to 30%.
Right. Okay. I asked everybody in that room last week. Nobody got it.
Okay, wait there. So you've got 100 big companies.
Wait, that means it's going to be something like 87%, isn't it?
No. Just think about the percentage.
Percentage. I don't even know how many companies are actually publicly trading in the UK.
Doesn't matter how many companies if it's percentage. Don't worry about it.
Okay.
Call it 1,000.
Okay. 5%.
Okay.
I'm going to say 24%.
Okay, you're very close actually. 2.2.
Yeah, because I'm thinking there's not even that many companies that would. Why would I want to go public if I can make so much money being private? That's my thought process. Because the only reason for me to go public is to have money, capital to expand and expand into other markets. Yeah. And if I'm going to do that anyway, I've left the country. Sorry, I've gone somewhere else. Absolutely. First of all.
Well, also,
I understand what you're saying.
Because it's set up that way.
Yeah, it is set up that way.
Because, as what Wes just said, be real where we are.
Yeah. Accept it. Look at smaller places like Singapore and places like that, and make how they've kind of turned themselves into a hub and made themselves attractive for foreign investment. Why can't we think like that? A little bit more innovative and a little bit less egotistical.
We need to build our own the line.
It sounds attractive.
Do something.
Something like a bit of call for that. Yeah, exactly that. Yeah, and the biggest problem with UK companies in terms of why they can't keep up with the US is earnings.
Yes,
but sheer size and capital. But then again, you would be is there more disposable income? Even like the Sphere in Las Vegas is a public traded company, amazing. Then there was one to go into London. London went, hell no, light pollution. Yeah. I'm not disagreeing. There's quite a bit of light pollution.
Did they absolutely say no to that?
I
thought it was light pollution. Then
nope, squash straight away. Nope, squash straight away.
So now you're hitting on regulation,
and now I'm like, you can't grow certain things if we just stop everything before it's even got there.
I'm not going to lie, though. I do understand. If they want to stick that in the centre of London, that thing, if I lived next to it, would be awful.
Yeah, Las Vegas is desert.
I would hate it.
But you can't say that Big Ben doesn't have lights on and the London Eye and every single building in London's got lights on.
But it's not as close and it isn't like the sun.
The Shard.
It's not like the goddamn sun's
The Shard lights up the whole of London from every angle.
Yes, but it's above 90% of the building.
You make a smaller sphere. You stick it somewhere like the Olympic Park in Stratford or somewhere.
Getting some big angry red face on there or the big yellow laughing face. It's a bit... But it would bring money into the area and it would bring...
It's not about the saying no to it. It's the part that you could have a giant structure bringing more tourism, more revenue, more...
Tourism,
It's about... If we need to grow it, you need to grow the economy somehow. And you have to do it.
And like the
we've also
we are very stuck in our way.
Okay,
we like the tradition, the history of everything, and we don't progress.
Okay, we love history. If I've been to London, I've seen Big Ben 10 times. I'm sorry, I've seen it. Yeah, it's great, and I love it, and I love living there, and I appreciate it every time I drive past.
Yeah, it's amazing.
But I want to see some new things as well.
Yeah. And there is, and do you know what?
You see it in restaurant industry. There's a new restaurant. We'll go try a new restaurant.
In saying what you've probably summed it up a bit in the fact that lovely, amazing. What's next? Yeah. And I think that's where we just miss a little bit. And even the US, as the size it is,
they don't even.
They're so innovative still. And the tech companies, they're all pretty much.
Okay, I know Kurz wants to talk about this now. Probably a beautiful segue. Saudi Arabia. We've seen what Dubai has done within 30 years. Has been vast, amazing, and Saudi Arabia, the way they're growing, the way that NEOM and like them investment opportunities, they're using what they've got right now, the sheer wealth and money to invest into them areas. Like, imagine if there was something like that in the UK. Like,
no way 500 billion can cover that creation, the NEOM. Not a chance.
I can't imagine it.
It's not.
I can't imagine 500 billion though.
Okay, amen to that, Wes.
500 billion to grow it is one thing, but I spoke to you, didn't you? Okay, I can imagine the workforce is probably a little cheaper out there.
I suspect so.
And I can imagine the fuel that they're burning is maybe not being used.
But that's
still not the other half of a trillion.
Saudi itself is, again, you talk about kind of disrupting and driving next. Look at what it's doing with sport. It's disrupted
amazing.
golf. And something that will never be how it was ever
and
again.
Do you know what? It did it overnight.
Oh yeah, pretty much. Yeah,
I took them
off.
We're going to offer PGA something. They're going to say no. We'll take their players.
Yeah.
They did it pretty quick.
Absolutely.
They've got the money to do it, haven't they?
Yeah.
Can take all the best golfers.
Football.
Take everything.
Yeah, football. Yeah, absolutely. Yeah.
Pay the best again.
What's next?
Pay the fortune. Yeah. And it's almost like, again, the US did that back in the 80s, or tried to do it with football.
It's not like they've done anything new. They've seen what's been done in the past.
Absolutely.
They just did it quicker because they've got more wealth.
Correct.
And to be honest, if we were in that scenario and you have that opportunity, well, why wouldn't you?
Yeah. Quite.
We've kind of done it over centuries.
Yeah, absolutely.
In a different way, but
yeah.
Yeah, because actually, I'm gonna ask you a question here. I want to see if you get this. How many barrels of oil do you think get sold a day? This is from Aramco.
I should know this.
Okay, barrel of oil. What's the price point? It's between $17 and $90 a barrel.
$82 a barrel.
Okay, good guess. $80, and I'm gonna have to do a maths because I said something in my head before, and I think I've said it wrong. So
you said something to me earlier today.
Yeah, but I'm now going to do it.
I don't know.
Which made me ask this question on the podcast because you were completely off.
Okay, so I've just done a calculation of 80 times 2.5 million to make 200 million a day times 365. Oh Christ, I've got to go sideways. 73 billion a year. Oh, it's got to be more than that because they make more than 73 billion a year off oil. Surely they must be like 100 billion.
What was the question again?
I'm going to say
how many barrels a day. So I can give you all the stats on what you've just asked there.
I'm going to say 3 million barrels a day because I've just done the maths on a calculator, and I think they make more than 300 odd billion a year in profit.
Like I said, I'm going to feel like I should know this. It's really bad.
No, this is good.
I don't know.
It's 12.8 million barrels a day. Now, they've been advised by the government to
sell
12.8 million barrels a day. So they've been advised by the government to not sell anymore.
That's a
just
trillion.
so
That's
they
a
can
trillion.
up the price.
So they can control price.
Yeah, control the price. So we're talking about the profits and stuff. 2023, they made 121 billion profit. Which is actually less than the year before. 2022, they made 161 billion in profit. 2023 gross was 440
in
billion.
2022, at one point, they were the biggest company in the world.
So they had the biggest, largest profit of any public traded company. Yeah.
It's because we all started needing oil again at that point.
Ukraine, Russia.
We've just said no to it. Okay, and I'm going to hit you with these statistics are great, but let's just say someone like Saudi Arabia, and we've just been speaking about our country because I wasn't thinking about this before, and they're able to control it and say that we can control the world market pretty much. I don't know what the second largest reserve of oil in the world, I think. Mm-hmm. Probably first.
Well, Saudi has got the cheapest way to extract oil because oil's at the highest point of the surface.
And oil's managed by OPEC, isn't it?
So,
which is the group that kind of decides supply.
Yeah.
Control supply.
Yeah.
But my one
Regulate
thing
supply.
that I was just about to say was that within our country here, within the UK, you saw the profits that were from oil companies or EDF being French over here, and they were the profit they were taking from us was being subsidised to the French actual people.
Yeah,
that's one thing that our government should put their finger in and be like, actually, hang on a minute, you just made how many hundreds of billions profit on us, like.
Well, that's the other problem with the British ISA, actually, because if you think about it, so they want to encourage more money to go into UK companies. Yeah. What do the biggest UK companies do? How do they make their money? From overseas.
Yeah.
So it's not really helping.
And actually,
they've not got their eyes open, have they?
This is paying for the line as well, because this is getting some of this profits getting put into the government's fund, which then the government's fund is paying for.
Yeah, but it's the prince over there.
Yeah.
The prince makes the decision, and that's the way it's done. But yeah, I think our UK, I think maybe they've just been given the wrong bit of information.
Yeah, they like to blame their aides.
Yeah. They like to blame somebody, and maybe somebody's just sent them
we're just
wrong bit of info.
Stuck in our ways. We're old-fashioned. We love our tradition in England, and we aren't 100% forward.
I think right now, Conservatives are up against it. What they wanted to do is some quick wins and trying to win some votes to see if they can stay in power.
And it's
so any long-term plan. To try and derive any long-term plan out of that is pretty pointless.
Yeah.
The worst thing is with politics, and whether it be, we talked about the global elections previously in the other episode, there's a clip on here, but you can't exactly say somebody's going to be in office for 3 years, let's work out a plan for the next 50 years or 100 years to best suit a country, when nobody's in the same mindset anyway.
And in fairness, I know we have the House of Lords, but in fairness to the US, they do have, the two houses.
Yeah.
And kind of from a market's perspective, when you talk about elections, they're always looking at that. They like the idea of that house to be kind of determined, so that there's a level of certainty. So you can't have somebody come in gunslinging and changing things
for the greater good of the country.
Exactly. Yeah, checks and balances and management and that side of it. So yeah, they do like that kind of management side of it.
So I'll quickly ask you, because it says, which I was reading on this, lower profits this year, but they managed to boost the dividends by 31 billion.
And you've
in the
gone back
fourth
to
quarter.
I don't know if I can pronounce it.
Aramco, yeah. I just wanted to ask, how can you have such a lower profit but be able to boost your dividends so much? Is that just...
That's the cash holding within the company, though, isn't it?
Yeah.
So it just literally doesn't matter.
So dividends, you can base it on retained earnings. So
Yeah.
Technically, it needs to be based on profit, obviously.
Yes.
But there's still
that much profit that it makes no difference.
Exactly.
Yeah.
Still plenty of profit, even if it's falling. Yeah. And I think, like, going back to Q1 2023, Nvidia, I think they announced lower profits at that point.
Yeah.
But the guidance was so absolutely incredible.
God.
And then they repeated it. So
it's not low profits right now.
Yeah.
That place is...
And actually, you mentioned, because you mentioned last time we spoke about buybacks.
Yes.
And it's an interesting thought, buybacks
within the company,
buybacks versus dividends. But there is, and again, Nick from DataTrek, he's done some work on that. And actually, buybacks can offer as much value to shareholders as dividends can.
Okay.
Because of what they represent. So, the firm is effectively saying, the controllers of the company are saying, we're that confident in what's happening going forward, we're going to buy some of these shares back.
Yep.
So if, let's say, for numbers, it's numbers, say the stock price is $10, pounds, and they buy back and they increase the stock price to 12, it's actually benefit the people that own the stock more than if we'd given you an increased dividend. You've still got a dividend, but actually what we've done is increase the value of your portfolio. It's more than putting the cash back in your pocket.
Instead of 50 cents in the dollar.
Which, in most cases, I'd like to think if you're invested in a good company and you've got a dividend stock, you're probably buying back the stock anyway.
Yeah, and if
in reality,
because of the dividend,
because of the dividend,
and if you've got a strong, well diversified portfolio, you'd like to have some of those dividend players and some of those growth.
Plus, if you've got a good company, like if it's our company, and I want to control more because I'm proud of it, and I know what we've got brewing for the next 3, 5, 10 years. It's going to be worth to us so much more, especially if you own a percentage of the company anyway.
And we had that a lot actually in quarter four, didn't we? A lot with earnings calls that we heard about this quarter. A lot of buybacks were announced. And that's it's a way of supporting what guidance they're giving for the next quarter or next year, how they're going to do. Buying some share back is a confidence in the management.
Confidence.
Do you think the buyback also ties into the increased interest rates, because therefore, like, you're going to make more money on that cash reserve anyway? So we're buying more stuff back on that sort of side, or not really?
No, I don't think so. I think it's more a kind of demonstration of confidence in the business plan and the strategy.
It's a statement out.
Yeah, it is a statement.
If we've got nothing to announce, we'll do that as a statement because at least we've got something to say, and that's usually a positive thing.
Well, it's really interesting to say that because guidance matters. So, like, a company can announce its results, but then that much like the central banks, what happens then to rates or volatility or the stock price volatility during a day can be derived based on what somebody is saying.
Yes.
So like Nvidia is a good example actually. The last market call, I think it was because so much is priced in. I think their results came out. I think it might have been down 4% actually on the day because it was all priced in, all expected. But as soon as Jensen Huang got on the earnings call and he was talking about the future, off it went.
Yeah.
Because he was talking about what's next, where they're placed, what their order book looks like, what the next bit looks like. So what they can say about their future. So what people say actually carries a huge amount of weight.
I think more.
But you have to have that trustedness to you as well. You have to have the backing, don't you?
Well, yeah, exactly.
Yeah, but it comes down even more than even the company themselves. Like, for example, I can't remember the YouTuber's name in America. He just like tech YouTuber.
Okay. Yeah.
Millions and millions of followers. Very, very well respected.
Yeah.
Anyway, he test drove the Fisker. The new one.
Oh, okay, right, yeah.
Gave it an awful review.
Okay.
Literally, I think, I don't know his exact words, but fundamentally said, worst car he's ever driven, worst electric car.
Yeah.
Stock within a couple of hours, halved.
Yeah.
Oh, sugar.
Yeah. And that's the power of...
He's never getting another car.
He will, because he knows, if I know I've got a good product, because they tried to offset giving him the car by months. It wasn't like, we'll give it to you next week. Months went by, they held it back. Yeah. So for example, say I've got a really good product.
It works
I've got FINT. I'm going to give it to him in the phone. He says, this is a brilliant product.
Yeah.
People trust him.
Absolutely.
They're going to go and do what he says.
That's the that's probably the firm underestimating who the influence of somebody like that.
And in our day and age, the value of a person is so much more than actually. Say we're investing in our company and we're moving forward. The value of somebody promoting and producing good content and good value and that content being spread across multiple micro influencers that have people that really trust and hold them is a value that I think big companies have underestimated in the past and are only now starting to switch on to being like, okay, we need to actually work with these people rather than think that they're actually separate to us.
They've never really been able to do it. I think in fairness, big tech is obviously because they are it. They've been able to kind of harness that, create that, influence that. Sometimes in bad ways. Obviously, we know Meta's got into trouble or Facebook when it was that over time. But they're already so well placed for that.
But the second biggest company.
What they have to understand is that their consumers are talking to their consumers.
Yes.
And that's what you
the ripple effect, the word of mouth is so
it's
quick. Yeah. And we just spoke about it before. It's something happens there, happens here, it happens everywhere within a second, less than a second. Yeah. So I think that's kind of something looking out for moving forward. It's you're investing in the company or when I look at things, or if I'm looking to invest into something or someone, I'm looking at the person and what they've done in the past.
Yeah.
Like what's their proven track record? Is that something that you look at, like when you deal with other people? Wes, I know you kind of said you IronMarket trades differently. You're not individually stock picking, but still, certain people within certain markets have such an influence.
Yeah, absolutely. It's still the same principles. Still that diligence process. I mean, even if we identify a macro area based on data points research that we think, right, we want to have exposure to that for the next 6 to 12 months or next 2 years or whatever it is. We will then, there will be various ways of deploying that. There'll be various ways of taking advantage of it. We've still got to know our stuff in terms of the diligence of where we place that. So even if that's diligence on the ETFs that you invest in or the fund manager that we might use, who they are reputationally, past performance, past track record in terms of sell discipline. There's a whole raft of diligence.
And do you look into that more so, like if somebody, as a wealth manager, you don't just obviously, you look at the full picture.
Yeah.
Pension funds, is that something you look into a bit more like what they've done in the past and what they allow you to do with your money as the board or the people?
We look things probably, I would class, we separate those things out. So a pension for me is a product, a very good one, a very tax efficient one, but it's a vehicle to allow you to get to a certain thing.
Yes.
So the two most important things are the financial plan, the absolutely key, what we're trying to do by when, on a timeline of today until you're 100, all the things that might happen and you want to do over that period. That's the most important thing. And then how your assets are built around how you feel and react and your risk tolerance is really important, and then the vehicle choice comes after that. So I'm kind of fairly agnostic about it. Obviously, they're very important, but really, it's kind of your plan first, how you feel, and how what your tolerances are, and then we'll use the right vehicles to enact the plan, and that's the best way of looking at it.
Okay, I have a question for you then. That's
I wouldn't say that, though, wouldn't I?
What are the benefits of investing in a well-structured ETF rather than, say, specifically stock picking, or even maybe being in the S&P 500 that can have such good growth, but also such volatility on, you could have a 10% 1 year and you could be on a -% the next year. There's a lot of volatility in that.
Yeah. So I think the last point is that's the journey of investing. So that's about having the right level of education. So if we're educating members, or we're educating our audience through FINT, in terms of you will have those periods. Your money will go down at some point. being aware of that. If you're investing, that's going to happen. But in terms of kind of ETFs, as you know, I'm a huge advocate for ETFs as a structure, an amazing thing. But what they give you access to is not just the market. So, for example, if we're looking at a piece of analysis and research, and it's saying, I'll make an example up, healthcare.
Yeah.
It's directing to healthcare being the right place to be for the next 6 to 12 months for part of your portfolio. We could then think, right, okay, healthcare where? US, okay. We can then you can look at an S&P 500 healthcare ETF. So you then have access to that entire sector instantly.
Yeah.
And not only instantly, but also at a really low cost. That's one of the things with ETFs. You can get an S&P 500 now at 0.03 basis points, so 0.03%.
Yeah,
3 basis points, and you can own, the S&P 500. So the best companies in the world for 0.3%.
So the ETF, the best thing about it is positioning. You can it can be quite surgical in what you want to really
that's where
target,
ETFs add value.
and obviously the cost that it is beneficial for
tax
you.
efficient structure as well.
Yeah,
absolutely. Yeah, and the other thing about ETFs too is they do trade like a share, so they do allow movements quicker than, say, perhaps a traditional OIC or a mutual fund, as they might be better known.
Yeah.
So one thing I just want to go over of what you were saying in there was the point system. How does this point system work? When you hear people talking about, something's gone up 50 points or it's dropped 50 or 100 points, what does this exactly mean, Wes?
Well, Lyft did 500 points.
Yeah, or 500 points instead of 0.5 points.
Yeah, so this depends on what you're looking at. So indexes. So if you've been listening to American podcasts, which I know you have,
yes,
historically they've liked, the points on the index. So that might mean the Dow, for example, is moved 100 points.
Yes.
Simply a nominal 100 points on the Dow. Has no reference to percentages at all. And that's just a nominal move. It's up 100 versus what it was yesterday. 5,000 to 5,100. That's simple as that.
Got it, yeah.
And then what you have got is things like, then you've got basis points, which I know is kind of the key thing. So basis point is a point up to 1. Anything below 1. Yeah. So, for example, if I'm saying an ETF is three basis points, which is also known as bips or pips, just jargony stuff, it's 0.03%.
Right, okay, yeah.
If it's 100 bips, it's 1%.
It's 1%, yeah.
So
thinking of it as like that, literally 1% means 100 points. If you hear somebody saying that in terms of that, that's what it means.
Exactly.
Yeah.
So like interest rates over 2022-23 moved technically about 500%.
Yeah.
Because going from 0 to 5%.
Yeah.
But I like to use it in that term because that's the impact. 0 to 5 doesn't feel like a lot, like you were saying earlier, but 500% difference feels massive.
Yeah.
And that's what a huge difference it makes. So when you and that's why it's really, you have to be kind of aware of what you're listening to and what you're reading and where it's coming from, because they can mean different things.
That's good to know that, actually.
Yeah.
That actually makes me think we should do, on a side note here, we should do a little bonus episode at some point.
Yeah, we will do a bonus episode.
To deal with all of this terminology and stuff.
Exact technical points of your pips, your points, your VIX, your bull, your index.
Because I've got a whole list already wrote down here, but we'll save that for another time then, actually. Yeah.
We'll do that as its own thing so somebody can reference that in the future.
I think it's great to do. Because I love doing it. I've loved doing it all over the years, because I think the more you can strip out or make easy to understand the jargon in our sector, the more, hopefully the more people are going to be attracted to it.
Well, it simplifies it all down, because if you don't understand what the words mean, and this was for me getting first introduced to it, it's scary because all of a sudden you feel confused, and then you get confused on everything else that's been said.
No one likes what they don't understand.
And in reality, it's your mic's there. In reality, it's simple once you understand that jargon.
I think it's an inside club sort of thing, isn't it?
It's
all boys club want to kind of keep it to themselves. Nobody else understands their language because they speak their own little lingo.
One of the things we say, in IronMarket, it's on our brand book, it's ingrained in what we do, is historically our sector has used what it knows against you.
Yeah.
Right? In terms of, cloak and dagger and that side of it. And we hate that. And obviously, I think probably the biggest epitome of the kind of opposite of that is FINT.
Yeah,
doing this, just talking and getting it out there, and
normalizing
people
things.
Understand. Yeah, absolutely.
Okay, Wes, I think you've got some other graphs that you want to go through. Let's.
Yeah, so this was more kind of talking about markets in terms of where we are, and it was linked really because Curtis gave me the thought process, just talking about. It felt more volatile.
Yeah. Well, there was one thing that I read. I'm just going to say it. They said it's not a bull and bear market. It's a duck market. It's real duck smooth market. On top, but underneath everything's just paddling real crazily.
Yeah, it's very interesting. Because I mentioned in another podcast before. Another thing we did about vibes and vibe session.
Yes.
Carla Scanlon.
We've always the feeling of a
that?
recession rather than actually a technical recession.
Exactly. Now. Yeah, and there's a little bit of that with volatility. You can't say vibe volatility, but you know what I mean, right? So looking at some US data, which is from the US government, and that's basically showing fear index, and it being kind of really low, and stretching back, it now compares to kind of times coming out of like the .com bubble, coming out of COVID. It really kind of replicates that. So whilst it feels punchy and high, and it feels like 2021 a little bit, I think the fact that we're talking about it and everybody's saying it feels punchy, it feels like 2021, is that element of skepticism that
they're just remembering.
And I think that keeps a market healthy.
Reminding people of
absolutely.
Remind them of the past. And
are we due a pullback in some areas?
Yeah,
absolutely.
Yeah.
You can't. Nvidia can't. An Nvidia chart or the chart of any company can't look like the shard forever.
I don't. Yeah, there's not a big enough chart.
It cannot look like that forever. That is impossible.
The shard. That should actually be an English reference.
It should.
We should turn that into it. The Americans won't. The tourist Americans will know what we're on about, but we'll be like, that's sharded, hasn't it?
For any Americans, it's a big pointy building in the centre of London.
It's gone shard.
Vertical. They can Google it.
Maybe not Wes, actually.
I'll put a photo on. Yeah, sharded. It sounds a bit funny now.
Yeah. But you can't do that forever.
Yeah.
It has to shatter.
Yeah.
It doesn't have to shatter.
That's getting worse.
Absolutely. So I think there is an element of, having that healthy skepticism is a good thing, and I think it feels like we have that right now. I know using feels again as opposed to kind of solid data. And again, we've the analysis we've got and our analysts that we're talking to, their view has switched. I know, and it's not kind of, we're not talking to, no disrespect, we're not talking to retail investors here. We're talking to economists and analysts all across the globe, mostly in the UK, who have switched and who have been cautious, and we've been cautious with them, and are now saying, not on the back of a rally, are now saying, no, it's changed. The data's changed. And they are moving risk on. And there's a few facts here that I'll run through real quick. So S&P 500 was up 21% in the last 4 calendar months from October. US market, obviously. 15 previous times it's done that. It's been higher 6 months later 15 times, and higher a year later 15 times.
Basically, the moral of that is the S&P 500 will go up.
That's effectively what it's saying.
Yes.
It's also very rare. Now, February was a very, very good month, and it's not usually. You have the seasonality we've discussed before. September's normally a bad month and all that kind of stuff. After 5% plus gains, the next month has been higher 5 out of 6 times when February's been up 5% or more. Also, the full calendar year has been up with a median of 20%, and the next 12 months has been up 13% on average.
That's very impressive numbers. I do.
Pretty strong.
Have to say.
This is talking about, and then moving into things like election years, which is what we're in now. If there's a recession 2 years before a president is up for re-election, they tend to lose, which is quite interesting.
Say that again.
So if there's been a recession 2 years before a president is up for re-election, that president tends to lose.
Oh, fair dues.
So that's quite interesting. And if there's no recession, they tend to win. And in fact, It's been accurate every single time, and the last time it was false was 100 years ago.
That's
Crazy.
outstanding.
That's crazy, isn't it?
That really is.
You know, I love stats. And this one's really interesting for me.
So that's the thing. If you were so knowledgeable and clever and you knew all these stats, you really you start to figure out what actually goes on in the world, don't you?
But
through history of stocks,
that is
recessions,
what we do.
It's,
it's not like we don't kind of take that and say, oh, it's going to be fine.
Yeah.
It's historical data is all the data we have, right?
Yes, yeah.
And kind of data that's coming through now.
All the actual precise data, anyway.
So what we're always trying to look at is, okay, this is where we are now. What does this look like that's happened in the past, and what happened?
What
then?
correlations?
How did things? Yeah. What correlations are there? What moved and where did it move? And how did it move and why did it move? So that you can then extrapolate that and think, actually, could we apply that now? And that's always for two reasons. One is to protect assets, frankly, to protect, and secondly, to be positioned in the right places to take advantage of where we are.
I feel like I've joined the bandwagon and game so late. Oh, I wish I knew all of this data. I've got so much revision. Yeah.
And this last one, these are all from Ryan Dietrich, by the way. And March is the fifth best month overall and fourth best in the past 20 years. After February, that's delivered 5% or more. March is higher 5 out of 6 times since 1950.
That's a very good chart. That chart is.
But this is an interesting one. So this is election years. I think I may have shown this last time. I can't remember. But it normally shows the start of the year in US election years.
Mm-hmm. Yeah.
The US market is pretty flat and then starts to ramp up in April and normally finishes pretty well. So that's that chart. And then obviously we'll put these up. But the orange one is that chart I just showed you. The blue one is us at the moment.
Yeah.
Which is why we think that it is a bit frothy. There might be a little bit of a pullback.
There's going to be some pullback at some point.
But the general playbook hasn't really changed and should play out. We'd expect to play out the same.
So if there is a slight pullback, do you think then there'll just be a slower incline for it to come back up then?
What normally happens is, and there is another phrase, you like my phrases, is that the markets tend to take the escalator down and the elevator down and the stairs up.
Yeah.
So they always go down quite quick and they come up quite slow.
And then it's on an angled upwards. Yeah,
absolutely.
Yeah. I love that actually. That's really
My
really
question
good.
is this, and you've made this phrase up yourself, or just
No, definitely not.
You guys sit around a table like, we need a new phrase this month.
I'd love to take credit for that, but no. I made the shard one up. We can use that one next. That's a Wesism now.
I feel like I don't know if the sharding today it is. Like I think it's not rolling off the tongue as well as I thought before.
And one of the things you said earlier about 7 stocks, Mag 7,
yes,
all that kind of stuff. One thing I have been looking into, and an interesting point, is that, I mentioned this S&P 500 equal weight.
Yes.
Yeah. So the S&P 500 normal is market weight. Mm-hmm. So that would be driven by whoever the biggest companies are, market capitalization, which is basically how many shares exist times the price, right?
Yeah.
Which is why obviously Nvidia is right up there. And the S&P 500 equal weight is whatever companies are in the S&P 500 equally weighted.
Yeah.
Last year, it looked a bit like that. So the S&P 500 market weight was 26%, equal weight was 10%. So if you weren't in that Magnificent 7 last year, you'd done okay, but my goodness, you've missed out.
So
right?
From
Nearly
the first Q1 January through to April-ish, you're pretty to March, mid-March, you're the same.
Yeah.
And then from mid-March, April on towards December.
Yeah.
You're on two different. You're still going up and to the right.
Yeah, but if you weren't on a Nvidia, Meta, Google, Amazon horse, then you're getting left behind.
You're literally at 10% if you're not, and if you are, you're on your way to 26%.
And that just proves that them companies are the safest options to be a part of.
Safe is not a word I would use.
Yes.
The growth market is there.
What was driving the market. Really. Yeah. That's what was driving the market.
Because this is not every year.
Obviously that's just 2020.
Tech is like within this year, as tech has just gone parabolic. Like certain things, AI and chips and everything's just been
and that
primed.
was the story last year. So that's what's driven that. It is the AI narrative. It is
the buzzword.
Tech's always been the top one.
Well, that's the thing.
Always.
For me, it's not even a buzzword. I think we will look back on this. This is generational story. AI is the generational story that's driving markets, investment, and our lives, frankly. And everything else that we do going forward. It's
forever going to be changing our lives.
Yeah, absolutely. Whether it ends up as a bubble or ends up as something that's fundamentally within our lives forever.
Personally, it's too big to not actually become something that's normal. Like you come into here, imagine if I want to clap my hands and the lights turn on. That's being driven by this. It's things that are actually actively making your life easier. It's not just like it's something that's not going to be.
And I
used
think the
future.
difference is that it's like look at Nvidia. It is generating money. It's generating profits,
and we're all using it right now.
Absolutely.
Yeah.
The difference between that and the .com bubble is the .com bubble was companies were being valued just because they were part of the .com thing.
Yeah.
Not necessarily they hadn't earned any money yet. So I think that's a huge.
The companies are profitable immediately right now.
But one thing I want to show you, which is really interesting for me, because what we are looking for as investors is for this kind of, you'd prefer the whole market to be doing well, right? Not just 7 companies. And obviously we've been looking out for that to happen. Been obviously a challenging period if you weren't in those things. And expecting that to kind of spread out. And it links back to, the volatility being low. And is the rest of the market going to catch up? I know you mentioned about kind of where are the others? Why aren't they kind of catching up? Well, this is 2024 to date.
Right.
The same 2 things. So the red is the S&P market weight, and the green is the S&P equal weight. So one.
That's pretty much similar.
S&P 500 market weight
both of them
7.7.
start 0 and they're the same graph.
7.7 equal weight is 7.
Yeah.
So not a lot in it, which is really interesting. So for me, again, as a macro observer, we're not up 15%, of course, but looking at that, that feels healthy. Feels healthy. Because if we've equal weighted all of those S&P 500 stocks, and we're getting the same as the S&P 500 that's got 30% in the big 6 or 7, that feels healthy. Healthier. As a market.
I understand.
Hardware and software is kind of working
And also,
together.
the other reason I wanted to show this is that as a tactical decision in some of our strategies, I did actually move from market weight to equal weight at the end of January. And from them until now, actually, it's slightly outperformed the market weight. And the reason it did
where's a round of applause there? Well done.
Don't do that because I don't know what you'll do if it goes the other way.
Yeah. Well, you've got a cap over there.
The reason of doing that is because we already carry structural positions and overweights in things like tech and cybersecurity and software. Didn't want to be too overexposed to those bigger firms. And was looking at that and looking at expecting the market to spread out a little and create some breadth. But that for me is a positive sign.
That's good.
I like that. It's good to see it. That was me on the UK. But so just in terms of where we are, actually, whilst it feels volatile and feels frothy and feels like 2021,
you're actually quite happy how it is.
And there was an NFT sold the other day for 16 billion.
What?
Won't talk about that.
Well, really? I missed that.
Have I missed that?
There we go. An NFT just sold for 16 million.
16 million.
Yeah, slight difference, but it's still an NFT.
What's the NFT?
It's the second priced higher ever.
Yeah, I was going to say, what the heck is that one?
Are we allowed to jump to conclusions and think somebody's moving some money very quickly?
Definitely something to do with that.
That's exactly where we should.
No,
is that
something?
Is that why Bezos is now the richest man in the world again because he sold a load of stocks?
No, this actually may tie into this reference. So I get in some black holes of watching and consuming some things.
Rabbit holes, we'll say.
Of just like, it always intrigues me how do people move money around the world.
Yeah.
And with crypto doing so well at the minute, even a guy at Run Club, his company is he works out how cryptocurrency is not been money laundering and really interesting.
Yeah.
I should sit down with him for a coffee, to be honest.
Yeah.
So he works how it's not laundered.
He's trying to not launder it and not allow it to get and all that side of it.
Yeah.
And he's obviously very busy these past couple of weeks. But one thing that I did find out, my phone's definitely listening to me, is that it was something like, let's say I've taken a cryptocurrency and let's take Ethereum because this was actually the topic, and I've made 16 million in Ethereum.
Yeah. Okay.
So I've made that in one wallet here. So call it wallet A.
Okay.
And I want to buy an NFT that I've made for 100 quid. And I've made 100 of them for 100 quid. So it's nothing. Even a pound, it doesn't matter.
Yeah.
I made 100, it's £1. I've made that NFT for £1.
Yeah.
I buy the NFT
Yeah.
of the 16 million Ethereum that I own.
Yep.
Buy it. So I buy that. Now it's valued all the NFTs at that value. I bought it off myself, my other self.
Yeah.
So I'm still keeping the Ethereum within just another wallet now.
Okay.
And I also get the NFT that I've made for £1.
Right. Okay.
And I've now got a value set at all the other NFTs being 100. And you can manipulate this and continue to do this within different things. So I can buy the next one that's saying that was purchased from
right. Okay.
for 16 million. So creating it as like a false economy within your own NFT collection. Plus it looks like the money's being moved from one wallet to another wallet.
Yeah. What you're saying there is he's just managing to then make all of his NFTs worth 100 million or whatever.
Well, I'm just moving.
Technically, you've only moved the same
amount.
But if he has another NFT, then that's worth the same amount. So
a bit like what
if
Pagani did with all their cars. They bought lots of cars and held them, and then obviously the difference is I've got a Pagani that I can drive and I love. In this scenario, I've got an NFT and it's just been said, and it's a talking point to show that they're being sold. That's a lot of effort just to move some money.
My point with these things always goes back to a very old-fashioned adage. Is
this a terminology for where should I write it down?
No, not really.
Okay.
No. Turn it into one. No, it's who's buying it next.
Yeah,
because that is where value was always derived.
The sucker turns up next, doesn't
it? It's only worth what somebody's prepared to pay for it.
But imagine if I bought one of these NFTs and somebody just bought that for 16 million. I'll buy it for 1 million. He still made a £1 million profit off making them sound good.
This is a phrase: greater fool theory.
That's a good one.
Yeah. Greater fool theory. There's always a greater fool than you.
Yeah.
You can sell it to.
That is actually very true.
Yeah. And that's that.
Wes got excited.
Yeah.
And
60 million.
And I say I'm the greater fool because I found out, actually, I bought a little bit of artwork and I found out they tend to put about 50% on top of it when you're buying it from a gallery. I didn't realise that.
They do.
Yeah. So you can knock off a good 10, 20%.
You have my number.
Yeah. Yes, I know. Yeah.
And what, guys, that reference is, Wes is a wealth manager on all sides of everything.
Yeah.
Because sometimes people just want to take a fool of you.
Bought it a long time ago.
And that was the perfect end to end it. Greater fool. I can't even say it.
Greater fool
theory. That's a tongue twister in itself.
And arguably, I think I know our sector loves using that as a blanket over crypto in general.
Yeah.
Greater fool.
Yes, it would.
On that note, we're out.
That's downward sharded.
That's shattered is the terminology.
There you go.
It's sharded and shattered.
For some reason, it just...
Oh no, it's all gone wrong.
Sounds really on the edge there, guys.
Yeah.
We don't want it to shatter. We only want shard.
Shard on the edge.
Okay, on that note, thank you so much for listening to Money Talks again. Please leave a comment in there, and you can find us on all social medias at Freedomimpact Trust.
And have a shard of a day, guys.
Yeah, and we will do that other episode about all the terminology stuff. And that's a really valuable episode that can be.
You can re-listen to them. Yeah. Keep coming
100%.
back to it. Note it down.
And we will see you in 2 weeks.
Yeah.
Cheers. Thank you.